But yeah, what do you want to talk? I mean, I've got stuff I want to talk about. Honestly, I want to talk to you about, your reflection on your founder journey thus far, because I don't think you get to do that too often. So we might as well.
And I did, by the way, I purposely did not prepare for this.
Yes,
or watch any. I scrolled through the YouTube page. And I'm like, okay, let's see what this looks like. But I didn't like go in and listen because you don't want to like talking points these things.
And also, I think you're actually the first Mark founder to do this show.
Well, it took 3 years to earn it, so finally got an invite.
Yeah, finally into the podcast
founder journey.
Yeah. Well, maybe start with people. Start with a little bit of your background. But let's we'll get to the founder journey, but start with your background. Who is Ben?
Who is Ben? From New York, obviously, as you know, from Long Island. It comes through in the accent, so I can't hide. And by the way, when I'm not, like when I hear a recording of myself, I'm even more nasal than I actually am in real life. But, grew up here from Long Island, a few miles away. Went to Harvard undergrad, and I guess very nerdy, like immediately wanted to spend my time in financial services and financial economics. And
were you exposed to that at home just as a function of being on Long Island?
Like in high school was very into like policy and political life and all of that. And I worked on a couple of campaigns. It was fun. It was interesting, but it kind of burns itself out.
Yeah.
I'm I'm definitely not doing that, as a profession. So I think when I got to college, first semester, started taking Ec 10, right? Intro to economics. Got very into macroeconomics because it had these policy elements to it. And it was a natural extension of okay, how does the government impact the real world? And so the class I took that really kind of set me on this trajectory was I had a professor. He was a Fed board governor. His name's Jeremy Stein. The class was financial system and the central bank. And that was the best class I ever took in school. That really kind of went into how does monetary policy work? How does it flow through the banking system? I just fell in love with it then. And I didn't know if I was going to go into banking or, try and get a job in private equity out of college or consulting or government, but I wanted to be in and around financial services.
Yeah.
So that was, kind of what got me started. I ended up starting off in banking out of college. I was at JP Morgan and the FIG group, covered some of the early consumer fintechs. So SoFi, Green Sky, Affirm, Lending Club, kind of Gen 1 of consumer fintech in the US. That kind of set me on the trajectory.
Yep. Yeah. It's funny to think back to that time frame where across all of those kind of assets, the key theme is providing greater access to capital. And debt products specifically for people. And so even when you trace back kind of the consumer or really the innovation of fintech, post 2000, the prevailing theme, which makes sense because it's all in the back of the internet, was, hey, just improve access to products for people.
The tech-enabled lenders, that was the buzzword, right? So Lending Club, On Deck, Prosper, Funding Circle, you're right. The initial thesis was how do we use technology to reach new customers who we couldn't, or at least the large banks weren't reaching at that time. And I actually, in a way, it's kind of what happens now, which is folks who are starting new businesses in financial services, they generally find early product market fit with underserved customers, right? And
because there's a need, they're in pain. They want access to something.
Exactly, right? And they try to expand into more mainline customers from there. But that concept hasn't changed.
Yeah. So you're watching all these tech-enabled lenders at JP Morgan. How do you make it to Citadel? And specifically, you were at Surveyor within
Surveyor
Citadel?
Capital, yeah. So Citadel has a couple of long-short equities investment businesses. The first two, so Global Equities and Surveyor, have kept their brand for a while. The third one is kind of cycled, but now it's Ashler Capital. But I was at JP Morgan. I was doing the banking thing out of college. I was there a year and a half, basically. And I just I enjoyed being, my coverage set. I'm still interested in those businesses. I learned a lot, but there wasn't a lot of room for ideation. And like, I'm an ideas person.
Yeah.
I own probably 100 domains, right? Like, that's what I enjoyed.
Classic founder signal.
But yeah, and you want to know what? I see the GoDaddy bill every here and there.
You're
and I'm
wow,
like,
that's 100 domains is like $1,000.
Yeah. I need to rationalize some of these things on my current salary. But I wanted to go to something where I could actually ideate, right? Like, investment banking is more execution oriented, right? And then my co-founder Truett, as you know him very well, actually hired me to come work for him at Citadel.
Shout out Truett. Okay, so you went from a more execution, order taking experience to being able to express your views in the real world. How long you were at Citadel for? 2 years?
4 years.
4 years. Okay.
Dinosaur years.
Yeah. So walk us through that journey and experience, because obviously at some point that's when you decided to found and start Clerq.
So Truett hired me, as I said. I worked for him. The book was primarily fintech and payments. I came in and he's like, help me expand my coverage. Very quickly, like, I supported him, but I also kind of helped build out coverage. Say 70-ish% of the book was payments, 30% other consumer fintech, payment adjacent, info services, touch things like capital markets. So covered a broad swath of things, but a majority of the book was always payments. It was the book probably maxed out over $1 billion. So it was fun. Like,
was there any leverage on that or no?
So the way it works, and I don't think I'm saying anything out of band, but basically, at the multi-strategy funds, at least at Citadel, the risk management and leverage happens at a global level. So you have all these quote unquote pods, right? And you get a set of capital. And the capital is actually measured in idiosyncratic risk. So there's like, dollar value is actually not what you're thinking about. You're thinking about what is my idio, right? And there's like a risk-based capital measure, essentially. You have parameters that you have to follow, but ultimately, like, the leverage happens when all those pods roll up and all those strategies roll up.
Okay.
Citadel levers it at a global level as opposed to
whatever
each
it is.
team controlling their leverage.
So you're operating with your pool of dollars to play with.
Exactly.
And there might be leverage on it.
Exactly. And there's a risk model, of course. So like it is market neutral and it is factor neutral. So there's some central factors, there's a risk model. You can't like have a massive lean on like growth stocks, for example. So it really forces you to like try to come up with true idiosyncratic ideas. Yeah.
Very interesting. So more idiosyncratic risk was better for you?
You want your idio to be as high as possible, right? Like, and that's
not, you're less correlated to everything else going on.
And it's supposed to be an alpha generating strategy, right? Like, I think there are a lot of folks who like call themselves alpha, but in reality, like
levered beta.
Exactly. Like, I think folks are smart and they come up with good ideas, but they know deep down, like, I am making this macro or factor bet and I'm going to express it through this security, as opposed to I have done a bunch of work on this security. Here is why it's going to outperform the most similar companies and express it that way. We were forced to do that in many ways. So, that it was a slightly different game than your average kind of, net long or long only shop.
And so what was that training like? So you're probably, I don't know, 23 or 24.
I showed up and literally the first week he like hands me like Visa's 10K and a bunch of research on Visa. And then he's like, you'll actually figure that out. Go to this meeting. It's going to be a group meeting. I won't say which company it was, but at the time, it was like a $60 billion market cap. It's probably a $100 billion market cap company today. And he's like, it's a group meeting. Go. Like, you don't have to know anything. You can hide in the back. There are going to be a bunch of other people. I show up. It's the CEO of the company. And there's literally 2 other people in the room and me. And we're like sitting at this tiny table. And I'm like, I legitimately know nothing about what you do. And like, I was scrambling. I was like, Ben, think of like 2 or 3 questions. And I did. And it was fine. But his style was sink or swim. Like, you'll figure it out. I'll guide you. And that's honestly like, in many ways, it's kind of how we operate as Clerq as a
Yeah, I was
company.
gonna say,
We
that's
operated our team at Citadel as we expanded that way also, which is like upfront, like over-index the people you think have high horsepower and can figure things out themselves and guide them and ask questions. But like you can't, there's certain things about public markets that are very hard to train people on.
yeah,
And like having an intuition for what's important is a very hard thing to train people on.
yeah,
And ultimately, like you're going to need to know the industry and the companies better than anyone else to make money. And that's a matter of just like internal motivation.
yeah. Because you got to put a lot of hours into it. There's
Yeah.
no avoiding that. I do want to come back to, when did you start to gain conviction in doing something on your own? Because obviously,
Took
like
about 6 months.
6 months into your tenure at Citadel.
Yes.
Okay, and you were like, great, I want to do something. But then you spent an additional 3.5 years there.
Yes.
So like, there's some sort of dissonance. That's a long time to sit on wanting to do something.
I was very lucky that Truett, and when I got hired, his boss, Brian, who we worked closely together, they basically gave me as much leash as I could take. So it's like, okay, you've picked up these names, like earnings are coming up. Let's put a position on. They'll start small, right? It didn't feel small to me.
Yeah.
Like a few $1 million felt like a lot of money to me.
I mean, because
But, like,
in on an absolute basis, it is. On a relative basis, it
yes,
isn't.
exactly. But still, like your brain needs to adjust to the fact that like putting $10 million on something is like a lot of money.
Yes.
When you haven't, it kind of feels like funny money over time.
Yeah.
But it was basically, hey, put on a position. Oh, you think this is what's going to happen? All right, let's put it on.
Yeah.
And you just have to like get over that like fear of like getting things wrong.
Yeah.
It's kind of like the baseball analogy, maybe with the numbers a little different, which is like the best public markets investors get things right maybe 55% of the time. Like you're going to be like an all-time legend if you're doing more than that, right?
Batting 300 is Hall of
Exactly.
Fame numbers.
Exactly. But ultimately, I mean, I got promoted every year I was there, basically. So, by the end, had my own kind of capital that I could deploy. It was a lot of fun.
Yeah.
It's a fun job.
Yes. And so
when you're making money.
Yeah. So you're doing well.
Yeah.
You're enjoying the business.
Yeah.
You're getting increasing comfort with taking risk.
Yes.
You have conviction in yourself on wanting to do something.
Yes.
And so you say, hey, I want to go start Clerq. I know there's more backstory behind that, but fill the audience in.
So I think it was really two things. One is the idea was percolating for a while in various forms. Like I think we were sitting there seeing the advent, but really adoption of open banking. And like that was like pretty watershed in terms of like what you could then build. And suddenly like a lot of the problems that we saw in the marketplace like became solvable, right? Where it's like it is impossible to like retrofit bank rails and make it like Visa and MasterCard, right? And provide instant authorization. But what if now we have access to, customers' bank data on an authorized basis? Like suddenly things that weren't possible that people had tried many times over became possible. So the idea was like kind of cooking, I'd say over a course of, really 18 months before we left. So there was that piece. And maybe it wasn't the best financial decision, right? Like that wasn't the primary motivator for starting a company. Frankly, it's probably, if that was the goal, it was probably, on an expected value basis, it's very hard to size, right? Because your chances of success at building something that is difficult and people have tried is very low.
Yeah.
I think for me personally, and I'll only speak for myself, I think one, I felt a little bit more comfortable from a financial perspective, right? Like New York is expensive, right? It's hard to live here on no salary, at least for a period of time. And like, I felt like I was at the age and just like position that I could take risk, and more risk than my day to day. And I think that had helped kind of like, I became more accustomed to taking risk. And it was like kind of a next step versus like if I were just in banking and I had a fixed salary and it's not like super performance based. I think there was that. I'd say the more like existential thing was Investing's a lot of fun, and no dig here, by the way. VC is very different than public markets.
Totally different.
And I really enjoyed just like coming up with ideas. I'd say there's a couple options. One is you could expand your coverage, right? You can build out a team, all of that. I felt like I hadn't actually like achieved anything.
Yeah.
And maybe, and I don't think that it's actually true, but it's how I felt. And like just had this like internal, like, I don't want to do this for another 20 years and like can't point to, oh, I actually like did something and created something. And there was like that, like, kind of voice in my head type of thing.
Yeah. So. You wanted to have a more tangible manifestation of your work.
Yes.
Makes a ton of sense. Okay. So tell people about Clerq. What do you all do?
What do we do? So what we do, just the quick tagline is we make it very easy, mainly now for high ticket businesses, to accept payments from their customer's bank account at the point of sale at low cost. So account to account payments, we've actually made it real for these customers. And the pain point that we solve is, and anyone who knows payments, right, like the big mega trend over the last 10, 15 years has been a digitization and verticalization of card acceptance infrastructure, right? So the Stripes of the world, right, have made it really easy for me as a company that sells t-shirts online to accept card payments, right, and get paid. That has worked well for a large part of the economy. So pure play e-commerce, digital marketplaces, you know, really just mainline retail, billing, things like that. It works well, right? Like, yes, if you ask any merchant, like, would you like
the 3%?
Of course they're going to say yes. I'd like my payment processing costs to be lower, right? But ultimately, the system works well. I think what we saw is there's a very large part of the economy where that 3% and card acceptance in general is an actual hair-on-fire pain point. And the way you can kind of suss that out is, are they doing things to manage that 3% that are inefficient? So businesses are still accepting checks, wires, legacy ACH, cash, and they all have drawbacks from the merchant side, right? They're not digital. They have overhead. They have risk, right? There isn't like a clean arbitration mechanism for them. There is a dispute mechanism, and we can talk about that if you want, but it's not a Visa MasterCard-like mechanism. And on the consumer side, right, like nobody expects to pay for something with a check anymore. And if I'm going to buy
because it's a bad experience for people.
I don't have a checkbook.
Yeah.
I think there was something in the last year, I can't remember what it was, where I needed to send a check. And I was like,
God, where do I get this?
I was like, Mom, can I borrow a check?
Sweetheart, that's not, I mean.
She's like, it has my name on it. I'm like, let me see if that works. People don't expect to pay for things with checks other than if I'm buying a car, right? Like, suddenly I need a check again, right? And that's a terrible experience. So we thought that there was room to actually solve a hair-on-fire pain point in real, large, mainline, legitimate use cases.
We'll talk a little bit more about the business and where you guys have settled from a product perspective. But, you know, one of the things that I was thinking of is when you think about checks, when you think about wires, when you think about ACH, you know, a lot of that still is from a B2B use case. There still are like the B2C use cases in that as well. But
you'd be surprised how much consumer check and wire volume there is.
B2C or consumer to consumer?
Consumers paying businesses.
You'd
be surprised how large it is. Now, the reason is that the transaction count is going to skew much lower than credit cards, but the average order
dollar
value
amount.
is that's where you're seeing it.
And it's like, you know, any inventor people will say, oh, payments is a massive business, and they'll be like, you know, they'll set aside Visa and MasterCard, but they'll also be like Stripe, huge, Adyen, huge, Corpay, like 20 billion, like whatever. Those are, you know, when you think about those pools, right? That's like the digitization, a largely B2B use cases, and they're eating share or participating in the share of like card volume. When you think about check, when you think about wire, when you think about ACH, what I think is so fascinating is that it's probably, again, this is the statistic I don't have in my head, but like, I don't know, like 30% of volume in the US. It's just this still
ACH is trillions of dollars.
Yeah, but when I think about the pie.
Yeah, the pie.
When I think about the pie, it's just so much volume, and people don't focus on it as much.
It's lower take rate volume, right? So the reason it hasn't necessarily had solutions chasing that problem is that if I'm Stripe, my take rate is, more than 100 basis points, right? I've built first into the card ecosystem.
Yep.
You'd have to adjust your business model to a lower take rate fundamentally, right? Because the reason that they're pushing people to check is because that spread just doesn't work for them. So your average auto dealer in the US, their margins are, call it 5 to 10%. 3% is not going to work on that, right? So they just won't do it. And you as a business from day one need to accept, I'm going to have a massive amount of volume. It's going to be a volume game, but I need to be willing to accept that lower take rate.
Right. Talk a little bit about the early days of finding product market fit in your customer base. Talk about what you learned about identifying pain in customers, because that's a consistent refrain when anyone goes on their startup journey. It's like differentiating between people who tell you like, oh, this is interesting, or I'd like to have that, or yeah, I would pay, to people like kind of foaming at the mouth to need your product.
I feel like that's a direct attack.
Not a direct attack.
I'm kidding. No, I mean, it's the one thing that I wish I knew before I started the business.
Yeah.
Right? Is like what product market fit looks like and what not product market fit looks like.
Yeah.
And
can you explain that for the audience to draw the distinction?
Which is, I think a lot of people, for various reasons, like you're a startup, they will tell you, this is super interesting. Call me back when you have something.
Right.
Or, oh, this sounds so cool. Like I definitely would use this. We would definitely use this. It's a combination of things. I think one is people don't want to tell you no.
Yeah.
Right. They want to be friendly. They want to be nice. I think people like to leave their options open. I don't need to be an armchair psychologist, but you're going to get a lot of things that to the untrained ear sound like a yes, but are actually a no.
Yeah.
And I think for us, where we saw it was in our core customer base today, we start primarily a large portion of the business is auto and power sports. So people selling cars, other vehicles, ATVs, 4x4s, things like that.
Fred Gullo, Toyota.
Yeah, exactly. Longo Toyota, I'll take. Largest Toyota dealership in the world. Which, by
Fred
the
Gullo
way,
is just the one from my hometown.
That was a Des intro.
Yeah,
so
go.
Props. Our first customer in our core customer base today, one was like, we did a Tegas call, so we cheated a little bit. And he followed up immediately afterwards. It was like, can I use your product?
Oh, yeah.
And we didn't even have a dashboard or anything yet. So we're like, we'll sign you up. We'll send you the DocuSign. And then in the background, like, we're like scrambling to get a dashboard ready for him.
Yeah.
And we got it to him in like 10 days, basically.
Yeah.
And he immediately started using the product on day one. And we got probably 20 to 25% wallet share in the first 2 months.
Yep.
And we're like, oh my God, this is real. He immediately followed up.
Yeah.
He started using it immediately. When you get a lot of, that's interesting, like follow up with me again, or give me a call in a month, and then they sign up, and then, it takes them 2 weeks to get rolling.
Yeah.
When somebody is following up with you in a very short amount of time and immediately starts using your product, and you see that repeated over and over again, that is
across different people.
Yeah, across well, the same customer base, with similar characteristics. That is much closer to product market fit. You can be misled for a very long time with people saying, this is really interesting, call me back when your product's ready.
Or you can have good salespeople. And then it's also like communicated versus revealed preferences. Right?
Yeah.
And then the comment on good salespeople is that a lot of founders are just very good at selling and also can be very aggressive and pushy with their stuff, which will allow them to generate some momentum early on.
I think there's 2 levels to this, which is you can, in our business, we are a volume-based business, and we don't own the entirety of the checkout yet. Maybe one day. So anyone who uses the product is using it because they're finding value at that point in time for that transaction.
Mm-hmm.
So yes, there's like 2 levels to the product market fit. Does the person we're selling into it want, selling the product into is making the decision, sign the DocuSign,
Yes.
right? Like that is where I think like good salespeople
They
can
shine.
mislead you
Yeah,
about
yeah.
product market fit. I think what's harder to misunderstand or to mask with good salespeople is actual usage of a usage-based product.
Right.
And that is to us like, yes, we got people to sign various DocuSigns.
But if you see no conversion, you see no conversion.
And you get no volume, it's not working, right? And frankly, like there were people who, I hate to like lump us in with other account-to-account payments providers or people who have tried that in the past, because we're solving a very specific problem as opposed to like we're account-to-account payments. And I think that I understand how people could be misled there, which is owners of businesses were like, this sounds cool, I'm signing you up. But the customers don't use it and the teams don't, and the merchant doesn't try to push it on them for whatever reason. So for me, what is a much clearer sign of product market fit is, can we have replicable usage across merchants without forcing it on them, right?
Yeah.
So we don't have minimums today, by and large. We've started to in certain very specific scenarios, but in hindsight, it was a good thing to not have minimums and not force people to use it to see if they actually want to use it and are generating value. And once we saw that be repeated over and over again, we're like, okay, we're swimming in the right direction.
Yeah. So you start to see that repeatability. Then what happens? You get
you
5,
tell me
10,
to grow faster.
Yes. 5, 10, 25 customers, whatever it is. And then you start to say, okay, hey, this is really working. What was going through you and Truett's minds at that point?
I think we said we need to figure out how to like build the infrastructure to make this repeatable, right? Because I agree with you. There is a little bit of like, can someone else sell your product who's not you, the founder?
Yes.
And that was step 1. Thankfully, the answer is yes. It becomes much more of like can we actually build a company now? And we're still in that process, right?
Yep.
Like we're figuring it out every day. But can I take something that I used to do and find someone else or a process or automate it to actually scale it?
Yeah.
And that's really where we are now. And parts of it we figured out and parts of it we're still figuring out.
Yeah, that's the journey for anyone. I've never asked you this question. Do you have an entrepreneur or a founder that you look up to, right? Where I don't want to say idolize because I don't think that's your personality, but like, is there someone that you're like, wow, you have the hypothetical, you can have 1 3-hour dinner with anyone in the world. Like, who would it be?
I could talk to a lot of people for 3 hours.
Yeah, but specifically for on the founder side. Maybe answer on the founder side and then Sarah, whoever the other person you want.
I don't know if I have like a specific person who I'm like, wow, they're amazing. I think my appreciation, anyone who gets to make up a number, millions of dollars of revenue, just getting there is so much harder than I thought it would be.
Yeah.
Like my appreciation for anyone who's built something that gets to scale, it's very different. Like you almost imagine that companies get built because they make sense and they should happen.
Yeah.
But you don't realize that like that's not how the world works, and you kind of have to will certain things into existence.
Right.
And my appreciation for that is much greater, where I look at anyone with $100 million of ARR now, I'm like, oh my God, that person is like a beast. Like how'd they get there?
Yeah, yeah.
I don't know. There are a lot of people who I think are smart, interesting. Like I gravitate toward people who know a domain really well, right? Like there's the guy who's going to know like stablecoin infrastructure better than anyone else and know the mechanics. Like I'm interested in the details. People who are that kind of character, like I would enjoy kind of spending time with them.
Don't exclude it to just a founder, or founder set. Who would it be?
Just to spend a 3-hour dinner with anyone in the world?
Yeah.
Oh man. Probably right now, Jalen Brunson.
Oh, all right.
Just because
Let's go next. Yeah.
He's brought a lot of happiness to my life.
Likewise.
And otherwise, New York's a struggle right now.
Yeah.
But Probably Bronson.
Yeah, a domain expert in a
and he's
different,
actually
kind of
like,
thing.
if you listen to him, he's clearly like a very smart guy. Also,
Yeah.
like,
and a real human. Like
he's a real person.
Yeah.
Like, he's not. There's some silly people out there.
Yeah. Yeah.
That's probably where I'd go right now.
Yeah. Okay.
That didn't answer. I know that was a total cop out question. And I was like, I'm not like an idols type of.
No, I get it. Yeah. But the other thing that I would like your opinion on is to your point of
I actually have one. Sorry.
Go ahead.
Mark Rowan is one of the smartest
the Apollo
people.
Guy. Yeah.
Yes. He is
Apollo and a Drexel guy.
He's like the professor.
Yeah.
As far as like CEOs and financial services, even before he was CEO, he's just like a first principles thinker. And like, if you look at what the alternatives industry looks like now, a very large portion of that is his ideas about yield, excess yield generation that became consensus in many ways.
Yeah. And not to mention, but all the Apollo, Blackstone, KKR, those businesses have done incredibly well in the public market.
So it's two things, and totally not payments related, and I enjoy that, by the way. But two things happened. One is, I think, partially ZERP related. Mm-hmm. There were a lot of folks who were underwater on their liabilities and needed excess yield. So it's a combination of ZERP plus new models that folks like Mark Rowan came up with, where private credit basically went from, a private equity sized industry to something massive.
Yeah.
Right. And frankly, it feels infinite right now. I'm sure it won't be infinite. But it feels like there's endless room to run. That was one thing. The other was the public securities. They became C Corps. Mm-hmm. So most of them were publicly traded partnerships. A lot of institutional capital and index capital can't own those structures. And becoming C Corps, they took a tax hit, right? Like, that was the concern. It's fun. They'd have to pay.
Did they go public as partnerships?
Yes.
Okay.
Yes, they were publicly traded partnerships. They took the jump. Most of them or all of them, the ones became C Corps. Mm-hmm. And the capital that could own these businesses just skyrocketed.
Yeah.
So it was a combination of those two things, I would say.
Super interesting. The comment I want to come back to is you mentioned, and I agree with this, building a company is a continuous act of will. But I also do agree with there is market timing certainly plays a huge 100%. Factor. Like, when I think about, to a certain extent, I'll pick on it, but when I think about like an outcome like Coinbase, probably $60, $80 billion company today, like, you obviously cannot build that pre-Bitcoin.
No.
But once you have that new entry point, plus or minus order of magnitude, people didn't know how big Bitcoin could be. And that has certainly helped it go from, a $10 billion outcome to this business that could very clearly be 100 billion plus continuously over time. So, like, would just love to get your perspective in general about how you think about how market timing plays a role as you are a founder currently building something of your own.
It's a really good question, because most ideas are not original.
Yeah.
Right. And like, if you're just thinking about it, like, are you actually too late? And you don't know who else is building at the same time. Right.
Yeah.
Like, we nominally in our space, like, there were more people building not the same toward the same customer, but like infrastructure wise, similar things at the same time that we didn't even know about when we started. Right. Turns out we don't really compete with any of them today, and many of them don't exist. But it's hard to know, am I too late if I've thought of it? Right. Mm-hmm. So that's on one end. And the other is like, is your customer base ready? You don't know until you try.
Right.
Right. And like, I think you need to actually be able to solve a problem on day one. If your product is important enough, they will tolerate it not being perfect.
Yeah.
And that's a real thing. I guess that's somewhat of the YC mantra, right? Just put it out there. If they're willing to use it and it's not perfect, it means maybe you're on to something. Mm-hmm. And we experienced that for real. So the first like 5 payments that I mentioned our first dealer customer, a small independent dealer down in South Florida, the first like 5 payments were like screwed up. and like it broke, they didn't process, and he just stuck with it because he's like, I need this.
Yeah.
And like they'll figure it out, they move fast.
Yeah.
I don't really know. Like, it's hard to time markets. It's hard to know if people are ready unless you just go try.
Yeah. And there's a little bit of, as an entrepreneur, if you have the luck or not luck, the opportunity to be a serial entrepreneur, like you get better at noticing when there are inflection points in markets. I think people still can never understand how big things will actually end up. And I also do think it takes, there's a little bit of specific brain wiring around orienting yourself to be worried about the upside and not the downside.
Some of it's luck also. Like people like to say, oh, I knew 20 years ago that this would be massive, right? I think like a good way to kind of size that is, am I actually talking about a big problem that people care about? I think that's probably, and I think...
Well, that's a function for venture markets.
It's a function for venture markets, but like, you know, if I'm Brian Armstrong, right? Or I'm like, it's early days of Bitcoin. Like, I think privacy, like people care a lot about privacy. And I actually see it. Like, like we contend with that, right? Which is like, do I want to share my bank account info to get X, Y, and Z service? Like, we see the implications of that when it comes to consumer privacy and like not skepticism of government and like the ability to transact privately, which is part of the original ethos of crypto, right? And Bitcoin in particular. Like that is a very big problem and a lot of people care about that.
Yeah.
And like whatever the solution ended up being, like
it worked.
Yeah.
You know, but
if I told you forget Bitcoin, forget crypto. If I told you it's, you know, post-financial crisis, we want money that the ability to transact without money that is controlled by the government, you're like, okay, that's a big idea. That can be very big if it works.
Yeah.
Like that's kind of, I would work backwards from that.
Yeah. Crypto, Bitcoin, that industry for sure in the fullness of time has proven to be one of the uncapped asymmetric opportunities within tech history. When everyone looks back, people will be like, oh, okay, like we had the computing revolution, we had mobile, we had the cloud, we had, you know, crypto.
I'm not 100% sold on that yet, but okay.
As in terms of being a do you don't think crypto will have staying power?
I think it has staying power, but it has had staying power by evolving toward traditional financial services.
Yes, and trying to recreate everything.
And away from the original value proposition and ethos of it.
Yeah,
which is why like stablecoins are the big thing, and stablecoins fundamentally have intermediaries who custody assets or at least are responsible for safekeeping assets. And it's a dollar claim, right?
The decentralization value and thesis behind it, people don't care anymore.
Yeah.
Or there probably are people who care.
That's kind of the irony is it's solving a very different problem than the original. I still think the original problem is a very big one, but it's solving different things now.
There's still ways, if you really care about like the peer-to-peer cash components or value prop of Bitcoin, that's still very possible today. It's just the overwhelming usage is not tied to those needs. I still think the overwhelming usages are still like speculation and speculation trading, and then now for millions of people just having access to the US dollar, which goes back to your point.
Yes, there are real applications largely outside the US and developed markets today, and those are legitimate.
Yeah. But where I was going with that thread or that line of thinking was saying, hey, here are all these transformations or inflection points and opportunities in kind of the tech pantheon, tech history. We're now at a new inflection point with AI.
Mm-hmm.
How do you all think about applying it to your business, using it to be more productive? And do you guys see opportunities to, this is a question for, I think, a lot of people in fintech is, are there areas where we can productize this for our benefit?
There's a lot to unpack in there. I'd say operationally, like AI is obviously going to be very important to every company, right? Like customer service has obviously feels like the initial use case that is sort of working. It still needs to get a little bit better for it to actually truly be like enterprise grade and for you to trust it without human in the loop. But operational things, documentation, right? Customer outreach, communications, like that I think is going to become like commonplace, table stakes, embedded in everything you do fairly quickly. Within financial services, I think what's somewhat nuanced is that it's a regulated industry, right? And you can't have free thinking models running roughshod over your data and making decisions, right? There's certain places where you need explainability, right? And you need to be sure of accuracy, right? And that's unique, and it's not just financial services. Any regulated industry is going to have those dynamics, but it's particularly true for us. And I think we're still wrapping our heads around like, where can we actually use this? We actually do have a handful of very clear applications where we have unstructured data that we believe actually has a lot of signal value for us and can be a material driver of things like detecting fraud, for example, and using LLMs to classify that data and clean up that data on a programmatic basis. Like, that's an interesting application that's very real, and it actually unlocks things that I don't know if we couldn't do it without it, but it would be an absolute pain to do it.
I know on a relative basis, probably more expensive because I would assume you have to throw people at it.
You'd have to throw people at it, exactly. So that's a real like unlock. We are just very careful that everything we do, we are following the law. We are tight from a regulatory perspective. So there are things that are in flux that we're kind of waiting for some clarity on. But I think ultimately, like in financial services, there is a lot of unstructured data that you get, and using LLMs to classify that, I think, is going to be a very real application. Machine learning, like I think people use AI as like a catch-all today, but ultimately like machine learning has existed in financial services and been widely adopted for various use cases for a long time. And there are obviously traditional ML applications for fraud, authorization models, things like that, that are more commonplace, I'd say.
For sure. Do you guys have any tasks that you've operationalized with LLMs specifically? And that could be on, something as simple as, even here internally, we use Granola a lot.
I am deeply anti note-taking apps.
I think this is contrarian. Tell me more. Do you think it's a privacy issue?
It's a privacy issue, and you don't realize the stupid things you say in normal conversation that are harmless and with harmless intent that sound really bad. Maybe I started my career at JP Morgan, which is like the largest, most regulated, like political institution on the planet. And then you're in public markets, right? Where like you don't want to say the wrong thing that sounds weird. You're going to get restricted on a stock, even though you didn't mean it the way you did, right? And like, I'm just deeply terrified of like saying something that you didn't mean and I don't know like what the big banks are and other regulated institutions are doing with note-taking apps, but there's going to have to be like some very specific enterprise features that allow that. So maybe it's a good thing. It polices people from saying dumb things.
Well, I was just trying to give an example of like, it's a very minor operational thing that we've adopted, right? It's again, pre and post.
We haven't had the need to do that yet. There's like baseline levels of automation that we should be spending time on that don't require generative AI at this point. Even customer service, like I want to be in direct contact with our customers at this point. Like I am,
which is still valuable.
I'm a very large percent of Clerq support at this point. And I want to do that because we're not at the stage where I feel like I should disengage from that and let some AI chatbot. Where we are using it in the very near term is actually more like data classification use cases. So I'll give you an example, which is there are close to 10,000 banks and credit unions in the US. This is a very niche problem, by the way. A lot of them sound very similar. So like First Bank of X.
First Bank of Omaha.
Or State Bank of Y. And if I'm searching, right, I'm going through search, right, and like I'm looking for First Bank of Texas, Houston versus First Bank of Texas, Dallas, right?
Yeah.
It is very hard. Like we work with multiple providers that we route to, and they all have different codes for that bank. And using LLMs to consolidate and reconcile to make sure the customer is getting routed to the right bank.
Yeah.
And using LLMs to do that with some degree of certainty, like that is it's solving a real technical challenge. And that's where we've been focused. I don't really trust it to interact with third parties or anything that requires certainty.
The core value proposition today for a lot of these tools, because interacting with multiple applications and grabbing data between them, they're just brittle at this point. They'll break. But if you have unstructured data, it's great at structuring that for an output right now.
Or at least getting closer to the right answer, right? Or if you need something that isn't 100% accurate, but there's value in it being 95% accurate. So like the example I just gave you, what's the worst thing that happens? The customer gets routed to the wrong bank and they don't complete a payment. Yes, that is a bad customer experience, but we're going to get a lot closer if we use the LLMs instead of trying to classify everything by hand.
Yeah.
Right? And I like those use cases right now. We are in a regulated space. We're a small company, right? I don't feel comfortable yet letting AI handle my customer service.
Do you think, what would make you more comfortable? Like what would
clear government guideline, like regulation that sets out the rules and where liability rests for hallucinations and things like that cause consumer harm, right? Like clarity around that, vendors that have SLAs that basically guarantee that and assume the liability for that, or at least give you a perspective of what could be my liability. And I think, to be very clear, I'm not a Luddite. Would it be in this business if we were? I think we'll get there very soon, but it's just not there yet.
Yeah, it's interesting. People are trying to help. I don't know how quickly government and regulations will move. I think in the U.S., people want to, actually globally, people want to avoid a patchwork of regulations because that puts downward pressures on any business operating. There are startups that are attempting to fill the liability gap because, to your point, if you
it's a real problem.
It is,
you see much more deal flow than I do.
But it's also one of these problems where it's is the market ready, right? Because one, it's derivative. An AI agent company would have to come to you and say, hey, Ben, we want to run all of your customer support.
Yeah.
And in the event we run customer support and we tell an end client the wrong information, and that involves either some financial loss to them or financial loss to you, we have insurance and are liable for it, and we can pay for it. That would involve that agent product being viable enough to say, hey, we can run all your customer support for a business like yours. And then also some liability provider selling into that agent. And that's effectively what they're trying to do, but it's still early in my opinion.
That makes a lot of sense. I'd say for us in particular, I think two things. One is, even if they assume liability on paper, there's reputational risk that extends to the business that is uncapped effectively.
Yeah.
Right? So there's that piece of it. The other is, and I think this is just a matter of the stage we are, there are a lot of things that we could automate today that we don't, because we want to understand what is the right automation to build. There's a long way. So customer service, how should we actually service our customers? How do they want to reach us?
Yeah.
What types of responses should we be giving to them that they understand, right? And I think skipping that and going straight to, we're going to use LLMs to handle it, you're going to miss out on understanding parts about your customer, which is a lot of the reason we don't automate certain things that we could right now.
How often do you talk to your customers?
Every day.
Yeah. And is that
it's unscheduled in many cases,
yeah.
But I'm heavy in support. I see every support ticket that comes in.
Yeah.
And I view that as a key part of my job right now.
Yeah.
I don't know how scalable it is, but it's important for us right now.
Yeah, I mean, I remember one of the things that was fascinating to me about the entrepreneurial ecosystem is I can't remember who, but it was some founder who's like, Series C, D, E, whatever. And he was like, yeah, till like, and it might have even been a public company at that point. So he might have been talking about, until they were Series C, D, or E. And he was like, yeah, I interviewed every single person who joined the company. And you're like, what?
So funny thing is, I don't know if he still does it, but Ken Griffin, until like much more recently than you would imagine, approved every single hire.
Which is wild.
Yes. Including my own.
Yeah.
Like up until that point, like he had to sign off on every hire.
Yeah. And you would imagine, hey,
and he would have real comments. It wasn't a rubber stamp.
Yeah.
He would literally send comments like, why is there a gap in this resume?
Yeah. Yeah. No, but if you aren't in the entrepreneurial ecosystem, if you haven't been a founder, you would hear that and you would say, that's crazy. That's a waste of his time. Why would he do that? But then you think about it and you're like, this guy has put in 30, 40 years of his life into building this thing and creating this culture. So if you were in his shoes and you're bringing in some incremental person, let's say you're welcoming someone into your house, would you want to shake their hand when they're coming into your house? Yeah.
It becomes impossible at a certain point and you hope to reach that stage. I'd say on the support side though, I think two things. One is like you get so much goodwill by providing good support. And it's like, it sounds like such a commodity, but it's real. And like merchants know who are their vendors who like actually care. Maybe this is not a good way to think about business. You're running a business, but I take it very personally if people like don't like our product or didn't have a good experience. And like, I probably shouldn't. It's maybe not a healthy thing to do. But if somebody's like Clerq sucks, like I'm offended by that and I want to prevent that from happening.
Yeah.
It frankly happens very rarely, which is a good thing.
Yeah.
But like I care that they have a good experience.
Yeah.
So, and that's why I'm like, a support ticket comes in, I'm like, I'm not going to wait till I just need to respond right now.
Yeah, you need to know.
So.
Yeah, and look, I mean, people differentiate their whole careers on just being responsive to people.
It's funny because you're like in Citadel land, you're getting invited to Knicks games and you're sitting down with CEOs of Fortune 500 companies and you're a 25-year-old pipsqueak and like asking them like, oh, why aren't you doing this well enough?
Yeah.
And now it's like me on a Saturday at 8 a.m. being like, I can't reset my password.
Yeah.
And it's like, I got you.
So
it's a funny change. But like they're real people who have real problems who are like trying to do their job. And there's a level of satisfaction that comes from that.
Yeah. What has been the most fulfilling aspect of being a founder?
It's really that.
Yeah.
Like knowing that we have created something from zero that our customers otherwise wouldn't have. Right. That makes their life easier. It either saves them time or helps them make more money. In many cases, so for our product in particular, like the salespeople at dealerships and the finance managers, it saves them time versus telling somebody to go get a cashier's check. They don't want to lose the sale, number one. So many times they'll drive a customer to the bank to get a cashier's check and bring them back.
Yeah.
And that's time they could be spending with another customer, closing another deal and, taking home more pay that month. And that's like,
also we are crazy that people do
it's a
that.
real thing. It's a real thing. It happens every day.
Hey, get in my car. Okay. And what has been the most challenging thing about being a founder?
I think two things. One is like living every day, not knowing if like you're going to succeed ultimately. And like, that is something you need to just get over.
Yeah.
And it doesn't get easier per se. I think that is a very challenging thing. And I think there's a mantra, I don't know if it's a YC thing or something else, but invest in founders who have nowhere else to go. Maybe that's right, because the more you have other opportunities, it's like harder to like
you're like, that's an opportunity cost.
Exactly. There's opportunity cost. So I think that's just like a never-ending challenge, and it's hard. Just like half of it is just keep on going.
Yeah.
And there are a lot of times, like less so recently, which is a good thing, but like early on when you're finding product market fit, very easy to get discouraged and be like, I'm done. Like, so I think that that's a really hard thing. In terms of like actual operationally, it is not hard to find acceptable talent. It is very hard to find and hire excellent talent. And good people have lots of opportunities, and it's a very competitive marketplace. Like that, I'm sure everyone, I don't know if you asked the question to every founder or whatever, but hiring great people is, and there's no like shortcut to it. Like,
there's no way to speed it up.
No way to speed it up. And you're, especially at the stage we are, like, you have certain personalities that are like, I want to be at the ground floor. I want to be a founding engineer, right? I want to be a pirate, right? And like, there are people who have that personality. And then on the other end, it's like, I'm going to go to Citadel Securities, make $1 million a year, and like have a job, right? And like in the middle is where most of your startup journey and most of your startup life is. And like finding the best talent who is okay not being a founding engineer, but also wants to work really hard and is like super motivated to get from, you know, $1 million of revenue to $1 billion of revenue, but on a salary that's less than what Citadel Securities is paying them. Like that, it's hard to find that. It's a smaller pool. They do exist, but it's a very competitive pool.
You know, this is a good or bad or ugly comment, but I've found that one of the cheat codes is just to look at where people grew up, like where their high school was, because the people who are willing to work very hard and take the pay cut, normally they have some sort of soft landing somewhere. And so you just, you know, can pick any nice school from any state, really. And it's like, especially if those people are already in New York, you're kind of like, like, what's going on?
there is some of that. It's really blocking and tackling, right? Like there's so much, like I do cold outreach. I do a ton of it, right? And just like shots on goal.
Have you found a way to automate the initial?
So it's interesting. There are some tools out there now.
Yeah. What are they?
I forget what, there are a couple we've tried. I forget off the top of my head. Two things. One is LinkedIn will block you. So they'll be like, "Are you doing bot things?" And like, what's funny is
like,
no. And I also think the best, like, smart people can tell if something is an automated message, and like, I try to focus on like, if I'm spending my time doing it manually, I try to actually focus on people who I might want to hire, right? Who fit a certain profile, and like send them a message that shows that I put in more than 1 second of thought into like who they are and why I'm reaching out. And the hit rate is much higher when you do that. I've tried the spam, just spam people. It doesn't work.
Yeah. It's still pain.
It's pain. People don't realize that half of like going from zero to product market fit is just like LinkedIn spamming people.
Oh yeah. And you gotta be relentless and shameless. You gotta send
the number of LinkedIn messages I've sent. I didn't even have a LinkedIn before I started Clerq.
Yeah.
Like I had to make one from scratch. I had no connections.
Coded.
Yes. I was off the grid, fully off the grid.
My last question for you, Ben, and this is one that I do genuinely love, because when I like started writing content and then doing these podcasts, like, you know, the main thing that I love about tech is that like people are very open. People are very down to give back and communicate to the people who are going to start companies 2, 3, 4, 5 years from now. You know, my main question for you is, you know, given everything that you know right now, you're in the middle of your journey, maybe even still in the early parts of your journey, knowing what you know now, whether it pertains to starting a company in fintech or in payments related to open banking, or just generally from what you've learned about entrepreneurship thus far, you know, what would your advice be to someone who wants to step into a role similar to yours and to be a founder?
I think a lot of people, especially now, they're seeing their friends go do it, right? And like, maybe it's the availability of capital, right? That's made it easier to raise venture funding, right? I don't know all the dynamics, but it has been elevated, like being a founder, as like something that is higher status in society, and I think that pulls in a lot of people. I get it, right? Like being an entrepreneur, doing your own thing, being your own boss, like there's maybe merit to that in some way. And I just, as someone who didn't know what he was getting into, as much as You can read everything, you don't realize that half of it's just going to be like pain endurance.
Mm-hmm.
It's probably not for everyone. And even for me, right? Like it has taken, like I've grown into it in a sense where there were things that I couldn't have imagined. If you told me that my job was going to be answering support tickets at 8 a.m. from someone who can't figure out how to reset their password, I'd be like, I'm staying at Citadel.
Yeah.
But on the flip side, right, like there is real satisfaction that comes from actually solving problems for people.
Mhm.
I'd say in fintech land, like there are a lot of people who look at inefficiencies in financial services and think that it's because no one has built technology to solve that problem. And most of the time they're wrong. Somebody has built technology and tried to solve the problem, but it's not just a technology problem. It's a matter of what are the incentives for all the parties?
Mhm.
Who are the players in the ecosystem? What can they do to stop you from doing it?
Mhm.
And that is why the things are the way they are. And I see a lot of this in crypto and stablecoin land, which is like the number of theses around, oh, let's replace cards with lower cost payments and now let's use stablecoins to do it. And it's like people have had that thesis in various forms for 25 years. And like they're right. Like, yes, from a technology perspective, that would solve that, but there are reasons why it hasn't, right? And like I don't think in financial services in particular, like people necessarily see that nuance from the outside.
Yeah.
And even us, right, who like came from financial services, like it has been my life, right, professionally in many ways and like core academic interests. Like even I knowing that they exist, there are always nuances that we've picked up
Mhm.
that are underneath the surface that you just don't know till you get into it and start doing it. Just because something seems like it is solvable with technology doesn't mean it's actually going to work. And that is somewhat unique to financial services.
Yeah. Yeah. We'll love it. Ben, thanks for coming on the pod.
Thanks for having me. 3 years late, but thanks for having me anyway.
Yeah, we'll do the next one in less than 3 years.